What a brutal weekend and what a brutal week to close on Bitcoin. In fact, that weekly candle is one of the biggest weekly candles, done, that we've seen in a long time. And for the altcoins, it was much, much worse. And the reality is that as bad as it was, the reality is that potentially this could get a whole lot worse because I don't think this is coincidental. I think this is all part of a major plan by Trump to kill markets. And I actually think that crypto is just a side effect of actually killing markets. I'm going to spell out the plan for you. I'm going to show you how I think Trump is playing a game to manipulate markets and how crypto is going to unfortunately suffer for a whole lot more. And unfortunately, if you think this is going to end in a matter of days or weeks, I think it might take a whole lot longer. So that's what today is about. It's not maybe the easiest show to do because everyone just wants, yeah, bro, we're going into a bull market. We're going into a bull market. But the reality is we have to tell you exactly how it is. So if that sounds good to you, I need you guys to subscribe to channel. I need you guys to obliterate the like button and let's get the show on the road. Okay? Let's get this time change thing out of the way. So you'll notice. Well, some of you may notice that we started the show an hour earlier. Right? If you're one of those people, just say in the chat. Yes. You started the show an hour earlier. The reason why we started the show an hour earlier is because we followed United States times. And yesterday, the United States clock changed to daylight savings time or the other way around. Now, the truth is that Europe hasn't changed yet, and some countries never, ever change. But this is NAM. Then you show time for the next 6 months. This is not the show time. So if you missed the live show today because you were late, just set your clock back 1 hour earlier. This is now the new show time. Because of daylight savings time in Europe. Your daylight savings time will kick in on the 30th of March and then it'll be the same time as it was on Friday. Okay. So, yeah, I understand why we are actually earlier, right? Amazing. Amazing. So someone says run find. Finally on time, someone says yes, very, very early. You understand that it's the clocks that have changed in the United States and we follow the United States clock, and that's why this is all happening. So now that that's out the way and you all know, to be here and to say present an hour earlier tomorrow, for those of you who are not just for those of you who are watching this on replay, you should have watched this in live, but never watched this in live because, it's very one big show today. I mean, I was going to do a show around old coins and whatever else. But the truth is, I think we have to address what is actually going on. And I think it's part of Trump's major plan. I'm going to show you what Trump's plan actually is. I'm going to show you why Trump has got a plan, and then I'm going to show you how long this thing can actually last and how low we can actually go. The worst. The thing is, I wish I could say to you, listen, I think the pain's over. I think you should buy the truth is, I don't think it's time. And I think there will be a little bit more pain or maybe even a lot more pain as this whole master plan actually plays out. So that sounds good to you. I need you guys to obliterate the like, but let everybody know that we have started the show even though it's an. Alright, let's actually get into the alpha of the day, I think. Let's start off by looking at the weekend. Just looking at horrendous weekly close. When you look at this weekly close, it is one of the worst weekly closes I've seen. In fact, I went back to see when was the last time that we got a $14,000 weekly candle. And those were once we had. We had them. Yeah. And this was the first dip in the last bear market, in the last bull market. And this was the beginning of the bear market. This is, I think, the collapse of Lehman. We've got a $17,000 candle. So this candle was actually pretty brutal to make things worse. When you look at it back on the daily, what you'll see is that Bitcoin not closed a day below the 200-day simple moving average. So from a technical point of view, not very good. Not a good sign. What we see is not exactly encouraging. That's Bitcoin. If you're holding alts or if you have been holding alts, it was an absolute bloodbath. And to make things worse, the problem is because there's no liquidity because they no buys for the ultra at the moment on the weekends when there's even less liquidity, that's when they go out and do liquidity ends. And that's why in the last 24 hours we shouldn't have had liquidations. And there are $651 million worth of liquidations in a low liquidity market. You got to be very, very, very careful of liquidation because you've got to be very, very, very careful of market manipulation because there's going to be market manipulation. Why? Because it's so easy to manipulate the markets, right? It's so easy to manipulate the markets because there's no buyers and there's no sellers. And that's when liquidation hunters go out and actually end up making a whole lot of money. And when I looked at this pullback, the one thing that I noted was how we had pretty much just pulled back to the same level that we were a week ago at this time. So if you look at the weekly candle, that's last week's candle. Not what you'll notice about last week's candle is that actually last week's candle would have been lower, right? Or would have closed lower, but then in the last minute in the death, we had Trump tweet this strategic reserve tweet. Right. So this was last Sunday. Trump tweeted the strategic reserve tweet. And then effectively, what he did was he made us close higher. But theoretically, if Trump hadn't tweeted a week ago, then basically I think we would have closed at the same level and we probably could have been lower. So what Trump's tweet did, it basically just set us back by 1 week, and if you look at that, we closed this week more or less where we probably would have closed last week had Trump not given us that true social tweet. Anyway, the truth is reality is that it's not actually this is much bigger than crypto. I know that we're all here and we're crying and we're complaining about our crypto banks, but this is actually much bigger than crypto. This is actually about stock markets and about wiping out a lot of value of the stock markets. And this is why I think that this might get a whole lot worse, because I think that this is part of a Trump master plan, and the master plan is actually designed to inflict a lot of pain on markets. And I think it's affecting, if you look at it, it really is affecting a whole lot of all the markets, not stock markets. If you look at a Tesla. So it's going to give you one example. Tesla is down another 5.6% today. And just to give you an idea, if you take Tesla from its top, Tesla's down 49.18%, so Tesla's down 50%, then I'm assuming that this pain continues. And if I look at the Nasdaq, I mean, we were waiting for the markets to open and down another 1.65%. So it really is becoming clear that what is going on in the markets now is part of something much bigger than crypto. This is about a master plan by Trump to actually crash markets. And that's exactly what's happening. You can see that if you look at some of the darlings of some of the stock markets, you've got Nvidia down another 3% today. But if you take Nvidia from its high to where we are today, it's down 50% now. To give you an idea of how big it is, 30% means that one stock has wiped out $1 trillion in market cap. Literally, one stock has wiped out $1 trillion of market cap, which is like 1/3 of the entire crypto market cap has been wiped out on Nvidia. As I said to you, Tesla down 50%. The S&P 500, I guess after today, is down this over the year. So the S&P 500 is down about 8%. But more importantly, the S&P 500 has not given back every single one of its gains that it made since Trump was actually elected. Same thing with the Nasdaq. So the Nasdaq also down. If you look at the Nasdaq top to bottom, down 12%. And again, if you look at where it is relative, the Nasdaq is now lower today than it was when Trump actually came into power. And so this is not a crypto thing. I know that for us, crypto, it's all about crypto, but this is something much bigger. This is part of a Trump plan to crash oil markets. And in fact, when we look at Bitcoin is actually holding up phenomenally well. Right? Because if you look at the traditional markets, trade fund markets have given up all their gains since November. And in fact, as I said, the Nasdaq is now lower than it was on the 4th of November. And the same thing with the S&P 500. Bitcoin is still way above where it was on the 4th of November. This is the 4th of November. On the 4th of November, Bitcoin was at 68,500. We're still at 82,500, which means that we are still, let's just get the exact numbers yet, we're still 20% higher than where we were on the 5th of November. which means that we've completely outperformed traditional stock markets. Right. And there's a reason for that. The reason for that is because the market is pricing Bitcoin as a tech stock, but also as a store of value. And if you look at the gold chart, which is the store of value chart, what you realize is that gold is actually pretty much like, look, a few minutes away from all-time highs. Like let's just see what all full-time high gold is not now 2% away from all-time highs. Right. And so the reason why Bitcoin has been insulated throughout this whole correction of the Nasdaq, where the Nasdaq and the S&P 500 and all the other markets have gone back to pre-November 5th levels. The reason why Bitcoin is actually doing better and why Bitcoin is still 20% up is only because in this case investors are looking at Bitcoin like gold, and gold is actually going towards all-time highs. And that is why when you look at your Bitcoin bags and your altcoin bags, there's a massive disconnect, right? When you look at your Bitcoin bags, okay, you're still 20% up from November. I don't know about you, but my altcoin bags are absolutely smashed. Let's just have a look at Solana as a proxy for all course. I'm not even going to use this. In fact, we can use these. But so if you look at it that way, where it was on the 5th of November, Solana was here. It's this week over here, right? So, in fact, let's just go to daily. I think that'll make it a bit easier. If we look at 5 November, let's go to 5 November. Solana was at about it was at 165, Solenis at 126. And that is the biggest and most reliable altcoin, so to speak. I can't even imagine what the rest of I can imagine because I know what my portfolio looks like. My portfolio is absolutely wrecked. And all the altcoins that I'm holding are down, way lower than they were before Trump came into power. This is quite a big thing that we need to speak about it again. The reason why that happened is because Bitcoin is tracking gold and the altcoins are tracking risk. And if you look at risk, let's just use Tesla as a proxy for risk, right? So if we use Tesla as a proxy for stock market risk and we say that Tesla represents risk and Tesla has done 40% of its high, and if we go back to November 5th, which would be this, we could just find November 1st, which would be October to be somewhere around here. You can see that Tesla is not back at the pre-election. At the pre-election levels, altcoins are more correlated to Tesla, which represents a risk asset, than to Bitcoin, which represents a mix between a risk asset and a digital store of value. And that's why your altcoin bags have been absolutely wrecked. And your Bitcoin bag, if you're holding Bitcoin, if the majority of your portfolio was in Bitcoin, you're not feeling the pain as much. The problem is that I know that the majority of people are actually holding altcoins because they wanted the outsized returns, and now unfortunately the rest have come to play. So I think we need to understand now why this whole thing is actually happening. Because as I mentioned, I don't think it's coincidental. I think the fact that markets are down 10, 11, 12%, I think the fact that markets are back to pre-election levels is not coincidental. In fact, I think it's all part of a massive game plan by Trump to actually reduce the markets. Right. Or to crash the market. And let's just say plainly it's a plan by Trump to actually crash the markets. And I think that if you listen to his interview with Maria Bartiromo of him, where he said he's not actually watching the markets, you pretty much get a whole lot of clues as to what's going on. Is that what you meant? The stock market going down was the disruption? What were you alluding to? Look, what I have to do is build a strong country. You can't really watch the stock market. If you look at China, they have a 100-year perspective. We have a quarter. We go by quarters. That's true. And you can't go by that. You have to do what's right. What we're doing is we're building a tremendous foundation for the future, tremendous foundation. And based on this interview, Trump basically said, look, he's not actually watching markets. And he said his objective here is actually to build a tremendous country. It's not about actually watching the markets. And that got the markets pretty scared. Let's talk about what he means by building a country. Right. Or building a tremendous country. I guess the biggest problem that this tremendous country has right now is the national debt. You can see the year we got $56 trillion in national debt. That's not the worst part of it. The worst part of it is that if you think about this debt, 36 trillion is the entire debt number, but over 25% of a $9.2 trillion of this debt is maturing this year and needs to be refinanced. So just imagine that you've got the total US debt, which is this number of. Yeah, which is the 36 or 37 trillion of that debt, over 25% of that debt, which is $9.2 trillion, is up for refinancing. So imagine that you've got a debt. Imagine that your debt is $9,200 and you need to refinance your debt. The problem is that if Trump now needs to refinance this debt because he's in power and it's his administration that needs to finance this debt, if they're refinancing this $9.2 trillion worth of debt at today's interest, which is this interest of which is around 4.5%, just give or take. If they need to finance $9.2 trillion worth of debt at 4.5%, the reality is that the amount of strain that they're putting on the future cash flows of the United States, on the future growth of the United States, is absolutely crazy, because the US would have to pay 4.5% a year on 4.5% a year, a $9.2 trillion. That's $500 billion in interest payments just on their debt. And so what Trump needs to do, he needs to reduce the interest rates so that he can refinance this debt in such a way that it's not going to really affect the United States as much. The problem is, how do you do that? The only way to do that is to reduce the interest rate, right? Problem is, how do you reduce the interest rate? Powell basically said he ain't going to reduce the interest rate. And so now there's a standoff, right? As Pompliano says, it says Trump. Trump told Jerome Powell to cut it straight. Powell didn't do it. Now Trump is trying to force Powell's hands by crashing asset prices, and it's become a game of chicken to see who will blink first, right? That's pretty much what's going on here right now. Trump wants to build this tremendous country. To build a tremendous country, what he needs to reduce the debt payments that the United States makes. Can't do it. This $9.2 trillion of debt that needs to be refinanced at 4.5%, refinancing that debt is absolute suicide. So the question is then, how do you actually reduce the interest rates? Specifically, how do you reduce interest rates in an environment where you have inflation, and inflation is not only sticky but actually increasing month on month for the last couple of months, like the last 1 to 2, 1, 2, 3, 4, the last 4 readings have always been one higher than the other. So how do you get Powell to reduce interest rates? Powell is looking at two things. Powell's looking at unemployment and he's looking at inflation. And when you look at inflation, and inflation has been going up every single month for the last 4 months, how do you convince Powell to actually reduce interest rates? Well, the answer is, I don't know if it's pretty simple, but this is pretty much what the answers, and this is what Trump's game is. The end game is to force the Fed's hand to reduce interest rates. Right. How do you do it? Well, the way to do it is to scare people. And when I say to scare people, you've got to reduce sentiment so much that nobody wants to spend anymore and nobody wants to invest anymore. And when I say nobody, I mean specifically. You want big companies to get so scared that there could be a recession coming up that they're not hiring people anymore, that they're not investing in the new project that they were going to start a year from now. You got to get those companies so scared that they stop spending. And one way to do that is to basically smash risk markets. Right? So if you think of a company who's using their stocks or selling their shares to finance future growth, and all of a sudden this stock price looks something like that, how amenable do you think they would be to taking on the next project? How amenable do you think that would be to taking on another 100 staff members? The answer is that they'll probably not do it because they're so scared of what's about to happen. At the same time, if you think about the consumer side of this, consumers feel rich and spend a lot when markets are running. And if you look at markets today, I don't think many consumers are walking into every tunnel, Gucci or whatever else and going to spend there. They're millions and millions and millions that they've just made. Right. I think those days are pretty much over. Right. So I think that the way that Trump does this is by scaring the market. And the easiest way to scare the market is to get asset prices, and specifically liquid asset prices and stock prices, to fall. The thing is that as soon as this happens, companies will realize that they're not hiring many more people. They're not making many more investments. And therefore, number 1, you'll get a higher unemployment. Number 2, you'll get less spend. And if you get less spend, then of course you're going to get less inflation. The only problem with this plan is that they need the effects of this mindset change to be reflected in the data. Right? So the problem is that it's not like happening from today to tomorrow. Trump cools down the markets today. So people invest less, people spend less, people get more scared. But it's not about doing it from today to tomorrow because you need that fear to actually be reflected in the data. The problem is that data is always lagging, right? So we only get data 1 quarter, 1 month, 2 months, 3 months after the data or all this stuff actually happened. Right. And so what Trump is pretty much trying to do is he's trying to scare the markets so much that the markets truly start to believe that there's going to be a recession coming up. And if he can scare Jerome Powell and the markets into believing that there's going to be a recession. Now, the one thing about recessions is that if people believe there is a recession, it becomes a self-fulfilling cycle. And the reason why that is because if you believe there's going to be a recession as a company, if your forecast is that there's going to be a recession, then what you say is I'm going to protect capital and I'm going to spend as if a recession is imminent. Right. And so the more people believe there's going to be a recession, the more they will spend. As if a recession is coming. And if they spend as if a recession is coming, they usually cut their spend. And so what Trump is effectively trying to do is he's probably trying to, in a way, manipulate this market to such a point that people will believe that there is a recession, therefore they will spend less, therefore they will hire less, therefore the economy will cool down and therefore Powell will be forced to reduce interest rate because the last thing that Powell wants on his resume is that he was responsible to getting the US into a recession. And so when Trump was asked on his flight, I think it was last night about a recession, you'll see how he dodges this question. Where are we going? He's about to land. We're just about ready to land. Maria Bartiromo, do it. And you kind of hesitated. I tell you what, of course you hesitate. Who knows? All I know is this: we're going to take in hundreds of billions of dollars in tariffs and we're going to become so rich, you're not going to know where to spend all of that money. I'm telling you, you just watch. We're going to have jobs. We're going to have open factories. It's going to be great. And the plane is landing. And thank you for a lot of good questions. So you see what happened. You see what basically happened, that he dodged the question around recession because he doesn't want the recession, but he wants it. He wants people to think that there's going to be a recession. So the Powell preempted because the last thing Powell wants to do is to be behind the markets. So I think the market's right, yet what they said President Trump's statements are not what I'm not watching the market was telling. What is clearly telling the market is that he is willing to do whatever it takes, including not watching the market, to reduce the rates and to lower the trade deficit, even if it involves going into recession. Now, the one thing that I think everybody's scared of is what's happening in China right now. In China, they've actually gone backwards and they've got deflation. Like if you look at the API, it's minus 2%. And if you look at the CPI, it's minus 0.7%. And so China has basically fired up the bazooka and is actually starting to stimulate. This is what Jerome Powell wants to avoid. And actually this is probably what Trump is trying to engineer alongside Scott Bessent and all those other guys. Okay. So let's talk about the progress that they actually making. So how much progress has Trump made? Remember, Trump's only been there for a very short period of time, and so all the effects of everything that he's done, we haven't yet got it right. But we do know a few things. Number 1, we do know that the fear and greed in the traditional markets is 17 right now. Remember, we said the big thing here is to actually engineer fear, because if you engineer fear, basically what happens is you get into this extreme fear category when the markets are here. This is when the markets don't actually end up investing because they say they're so scared. So let's look at the progress. 1, they've managed to get the markets into extreme fear. Let's look at inflation. When it comes to inflation, inflation says that inflation is actually 1.39% on Wednesday. This Wednesday, we have inflation numbers. If you look at the expectations based on the last inflation reading was 3. And if you look at the expectations for this inflation, it's actually 2.9. So we're currently forecasting inflation to drop for the first time in 5 months to make things even better. If you look at the Cleveland Fed and they forecast inflation pretty well, they're looking at inflation being 2.83, not 2.3 just, and so maybe rounded off to 2.80 to 2.8 to 2.9, we could get inflation coming in at 2.8%, which could give us some kind of progress. At the same time, if you look at the US layoff announcements and you look at the candle on the US low for announcements, you can see that, as Dent Appears said, he says unfortunately this year layoffs have never spiked to this degree outside of recessions. Fourth largest spike in 25 years, and more coming, uncertainty causing markets to slow down much more than anticipated. Right. So in fact, this whole master plan, all this uncertainty has actually caused people to be so scared that they actually start laying off people very, very, very quickly. On top of that, they have managed to slow down GDP. Remember that we had this Atlanta phase forecast for GDP. They are now forecasting GDP to be minus 2.4%. When does this reading actually come out? The estimate? Let's find out. Yeah, okay. So we'll find out. But what you can see is that currently the Atlanta Fed is forecasting a GDP slowdown of minus 2.4%. So not only are they saying that the markets are going to slow down, but they've done a U-turn, because the previous GDP was positive and now they're talking about it swinging to negative. So that's a massive, massive, massive swing. The real indicator of what the markets believe is the markets themselves. Right. And if you look at what the markets are telling you, if you look at the US government bond, 10-year Treasury yield. Right. The yield last week dropped quite a bit in the last couple of weeks, it dropped quite a bit. Now the reason why the yield has dropped quite a bit are the two reasons. One is because Dodge is cutting spending, but two, because of this terrible word called the recession. And they're saying if there's a recession on the horizon, Powell is going to have to reduce rates, and therefore yields on debt are actually starting to come down. When the yields come down, the dollar crashes because nobody wants dollars anymore. Because if the yields are coming down, what do you want dollars for? Because if you're going to invest them, you're going to earn less yield. And so you can see that the markets are starting to believe that this is starting to have effect. In other words, they're starting to believe that people are getting really, really scared. And what you've got to remember is that markets are actually forward-looking, right? So markets look one period forward, or at least one period forward. And so, yeah, what the markets are telling you is they're starting to see the pain. But these markets are starting to show you that they're starting to see through the pain. So the Treasury yields dropping and the Dixie dropping, that the current markets are starting to feel pain. But these 10-year markets are starting to tell you that. Hold on a second. They looking straight through the pain. Now, let's talk about how long this will last. Okay. So let's talk about how long this could actually last, and whether or not we're actually in a bear market. I do see a lot of posts on Twitter and a whole lot of other places saying we're actually in a bear market. We're in a bear market. Nobody wants to believe it. I locked in the bull markets. Oh, I think I read something from Call the Moon, which he said something like, he refuses to believe that there's going to be that we're in a bull market. In a bear market right now. The question is, first of all, are we in a bear market, and how long is this pain going to actually last? So as I said in my tweet over the weekend, I said, look, the problem with this is that we all want things to resolve themselves. Now, the problem is that that's not how it works. This needs to go for so long that it actually gets reflected in the data. Right. And that means that it's going to go for at least a month. And if not a month, for at least a quarter. Right. Why? Because you need it to be reflected in the data. Data is measured in months and quarters, right? So to think that this is going to resolve itself in the next day, week, probably not. The question is not when it will resolve, but when you believe that markets will look forward enough and see it resolving in the future. So, right. It's not about identifying when the cuts will come. It is about identify or when the date that will force the cuts will come. It is about identifying when markets will see in future. The data being able are coming. So that's pretty much what you're looking for. Now let's talk about the actual levels and stuff like that. So the first thing is to remember that even though the Nasdaq is down a lot, it's down from its week high to where we are today. It is down 11.5%. You still remember that if you look at it from January 2024, which is just give it a year, we're still up 20% in 1 year on the Nasdaq. And so from a traditional market's point of view, the traditional markets can actually take more pain. And I would argue that Trump actually even wants them to take more pain because the more pain, the quicker Powell will reduce the interest rates, the easier he can refinance the debt. And I don't think that Trump's looking to refinance a debt of 5,050 basis points off. I think Trump is looking to refinance the debt at crazy numbers off. Right. So then we look at Bitcoin and we say, okay, well, how low can we go in Bitcoin? So my theory on Bitcoin is that this level is the next critical level, and I say the next critical level is around this $73,000 level. Why have I specifically picked that level? Because Track 5 markets have pretty much given back all their gains, right? They've given all their gains back to the 5th of November. Bitcoin hasn't. Now, if Bitcoin goes back to these levels, then I've got to ask myself a question. Okay, is it going to bounce or are we actually going into this long bear market? So let me go through what I mean here. When I look at the previous administration in this period over here, for most of this period, we believe that the previous administration was actually going to be in power. I don't know if you remember, but the odds swung towards Kamala. We all thought Kamala was going to win, or there was a greater than 50% chance that Kamala was going to win. And we in this period, we imagined that we were going to go through 4 more years of the hell that we went through with the previous administration. Right. And so the reality is that if we get to these levels and we don't have a significant bounce and we break down below these levels, then I've got to say, you know what? Thesis overruled. We're in a bear market, and I don't know how long this bear market going to last, but I don't think that's the case. And I'll tell you why I don't even think we'll get there. But we could. We could what? I think doesn't matter. We could. We may or may not get it. The question is not when it will resolve, but when you believe that markets will look forward enough and see it resolving in the future. So, right. It's not about identifying when the cuts will come. It is about identifying or when the date that will force the cuts will come. It is about identifying when markets will see in future. The data being able are coming. So that's pretty much what you're looking for. Now let's talk about the actual levels and stuff like that. So the first thing is to remember that even though the Nasdaq is down a lot, it's down from its week high to where we are today. It is down 11.5%. You still remember that if you look at it from January 2024, which is just give it a year, we're still up 20% in 1 year on the Nasdaq. And so from a traditional market's point of view, the traditional markets can actually take more pain. And I would argue that Trump actually even wants them to take more pain because the more pain, the quicker Powell will reduce the interest rates, the easier he can refinance the debt. And I don't think that Trump's looking to refinance a debt of 5,050 basis points off. I think Trump is looking to refinance the debt at crazy numbers off. Right. So then we look at Bitcoin and we say, okay, well, how low can we go in Bitcoin? So my theory on Bitcoin is that this level is the next critical level, and I say the next critical level is around this $73,000 level. Why have I specifically picked that level? Because Track 5 markets have pretty much given back all their gains, right? They've given all their gains back to the 5th of November. Bitcoin hasn't. Now, if Bitcoin goes back to these levels, then I've got to ask myself a question. Okay, is it going to bounce or are we actually going into this long bear market? So let me go through what I mean here. When I look at the previous administration in this period over here, for most of this period, we believe that the previous administration was actually going to be in power. I don't know if you remember, but the odds swung towards Kamala. We all thought Kamala was going to win, or there was a greater than 50% chance that Kamala was going to win. And we in this period, we imagined that we were going to go through 4 more years of the hell that we went through with the previous administration. Right. And so the reality is that if we get to these levels and we don't have a significant bounce and we break down below these levels, then I've got to say, you know what? Thesis overruled. We're in a bear market, and I don't know how long this bear market going to last, but I don't think that's the case. And I'll tell you why I don't even think we'll get there. But we could. We could what? I think doesn't matter. We could. We may or may not get it. To absolutely collapse. He's got to get them to collapse just enough for the Fed to start loosening, and then basically we can get the show back on the road again. So all you need to do is basically survive and accumulate good quality, old that you're willing to hold multi-cycle. I see someone here, a friend of mine, I'm not going to mention names. He says you're wrong. The Fed doesn't want to save the economy. They'll sacrifice their recession to stick it to Trump. They just want to fight inflation. Okay, well, let's see. Let's use right. Either I'm right or he's right. I won't mention his name because I don't think he wants me to mention his name. Anyway, I will see you guys again tomorrow.